afternoon, everybody. Welcome to the Moving Market Podcast. It is Wednesday, October the 8th, 2025, and the U.S. stock market will close in just about 20 minutes. I'm starting this about 1:40 p.m. my time. I don't think I have enough to share today to get us all the way to the close, so let's get a quick update on where things are at right now. With about 20 minutes left to trade, Dow Jones Industrial Average barely into positive territory. It's been back and forth all day. S&P having a good day, 0.5% up, and the NASDAQ having a great day at a full percent up. So making up, at least on the S&P and the NASDAQ, definitely making up for the sell-off yesterday. When we were looking at these yesterday, specifically the S&P and the NASDAQ, we're talking about how many days in a row we had of up trading, the little dip that's come every so often and then just quickly reversed. Who knows what will happen on Thursday and Friday, but this yesterday wasn't even a dip. It was more like one of these, one-off days that didn't really alter anything or change the direction of the market. Even a day like that one I just circled, that was kind of a, I don't know if I can zoom in on that or not, but kind of a big one-day drop. That big drop was from a really high open. It fell quite a bit and then came back up to where it made not that much of a difference. So, yesterday in context with where things are at today, and assuming in the next 20 minutes we don't get some kind of a crazy, massive turnaround in these markets, assuming they just kind of continue on this trajectory, there's the intraday chart. And after starting kind of slow, took about a half an hour, and then things climbed, and then for a couple hours it just continued to climb. And with a few little dips, it's maintained pretty much that 0.5% to the upside for the majority of the day. So good day on the, like I said, good day on the S&P, good day on the NASDAQ. In fact, I think the NASDAQ, if we look at the one-day chart on the NASDAQ, same pattern. It's just at a bigger percentage. It started down a little bit, climbed in the first half hour, wobbled a little bit, climbed kind of steadily, and now it's had a little bit of an additional surge just here in this last 30, 40 minutes. So we'll see if the NASDAQ in the last 20 minutes or so of trading can hold on to that. It just, all it does really is confirm that yesterday was kind of a one-off. This news probably is largely responsible, this news being the Fed minutes, largely responsible for that last 30, 40 minutes of surge in the NASDAQ, assuming it holds on and still finishes up that high. And the promise of a couple more rate cuts before the end of the year, it's good for all public companies. I think it becomes especially good for the NASDAQ because tech companies tend to borrow a little bit more. They're always looking to refinance debt. They per capita percentage wise for the company, they probably put a little more into R&D. And so I think you just see a rally in NASDAQ stocks as a result of that, a little bit stronger than what's going on in the Dow Jones. And with the Dow Jones, because it's a sampling of only 30 companies, the Dow Jones can get so easily skewed by one or two companies. JP Morgan is down 1.5%, or excuse me, Goldman Sachs down 1.5%, and JP Morgan down 1.15%. Goldman Sachs, I believe right now currently is the heaviest weighted company in the Dow Jones Industrial Average, trades for over $770 a share. So when they take a hit of $12.50, the fact that the Dow is flat right now, you could have, I don't have time to do the math right now, and I didn't do it before I got on. That could be accounting for enough dollars in the Dow Jones Industrial Average that if you took that out, maybe the Dow is up an equal percentage to what the S&P is. It's probably not enough by itself to move the needle on this 50%, but take take Goldman Sachs and JPM, American Express, another financial company, down around the same percentage. All of them traded over $300 a share, and Goldman Sachs more than double that. That's a lot of the Dow Jones Industrial Average right there. That's a lot of dollars, a lot of percentage of the Dow. And so, you get those financial companies down a little bit, that could certainly be skewing things. I'd like to believe that this headline right here, if you can read that, it says IRS is going to furlough nearly half of its workforce due to the government shutdown. For me, personally, I think that's a cause to celebrate. There's no one individual that has a job with the IRS that I'm going to be happy or gleeful or celebrate them losing their job. I don't wish that on an individual, but the IRS as an organization, I wish it would downsize by 90%, because everything the IRS does could probably be done with some good computer programs, and we wouldn't need to have all that money going into that organization. We could simplify the tax code so that, number one, no one had any incentive to cheat on their taxes or get out of paying taxes, and number two, it would put a whole industry of tax accountants out of business. Again, I'm not wishing specifically for anyone who's a tax accountant to lose their job, but I'm okay with them having to find something else to do or change things a little bit. But I'd love to believe that was the reason you're getting this boost in the market. It's probably not, but it's nice to fantasize a little bit about that. Government shutdown continues. I think that's kind of old/no news. We kind of knew we would enter into the second week of shutdown. It still appears that Democrats are dug in hard. They have nothing to stand on. It's unfortunate that they're taking the stance they are, but I'm okay with the government being shut down longer. All of our trades are looking really good. Our spread trades are looking fantastic. We're possibly going to hit 400% this year, which is something we've never done on our spread trades. Now, I'm well aware that a huge amount of that is the return we got on a Palantir Leap call and an NVIDIA Leap position. But if we took those two out, if I were to zero those two out on our total returns for the year, we are still looking at 125% up on the year, which is fantastic by itself. We've still got almost 3 full months to trade, 2 months and 3 weeks left to trade this year. And the trajectory we're on, we could easily finish at 130, 140. And that's without those two trades. But you put those two trades in, and we've had just some phenomenal success this year. We've got this Palantir Leap that is also doing wonderful right now. I put on Discord today that I closed my Amazon trade. It's not that my position on Amazon has changed. I'm still very bullish on Amazon. But that quick 16%, I mean, we opened this trade a week and a day ago. And to get 16%, it just seemed like such a no-brainer. I felt like I kind of had to take it and get out. I'm probably going to take this great profit on Palantir and jump out of that one before the earnings. And don't worry, we'll look for some other trades to put on. Things are looking good overall on the triple play side of things, with the exception of that MicroStrategy trade. I should say Strategy. The new name of the company is Strategies Inc. They are up on the day, but they have struggled today. They've been down, they've been up. They were way down for a little while. They've come back up to being in positive territory. It's likely that, barring a big, we're down to 12 minutes left for trading today. I'm not going to do something before the market closes. I'm hoping they rally a little bit farther. It would be so great to just see them get back up here to 140 or 340 or above. I think they could very, very easily do that before the end of the week. Got about $10 more to go from where they're at right now, a little less than that. But I don't know if we can sit on our hands and wait and hope they do that by the end of this week. It would not cost very much to roll the entire trade out 1 week. Leave the strike prices exactly where they're at, roll it out. It would cost about 25 cents to do that. That could be a little bit different. It could be a little bit higher, a little bit lower tomorrow. I can tell you that is probably what I am going to do with this one is, if I don't have to pay any more than 25 cents a share, I'm probably going to roll it out and just put that trade in place. It's the same trade. Debit's a little bit higher on it. It'll be for next week's expiration instead of this week, because I think there's an excellent chance that this will just make a turn and go back up. I think we'll see yesterday as a one-off. I just don't know if it can do it fast enough for us to be in the position we want to be by tomorrow and Friday. I don't want to go into Friday morning worried that we might not finish above 340. I mean, if tomorrow at the open this thing was up 10, 12, $13 a share, and by the close of the day we were up here somewhere close to 360, not only would I not adjust the trade, I think we'd be able to close it and get a profit, maybe not the total profit we were looking for, but enough profit that we wouldn't have to worry about it. So that's where we're at with MicroStrategy. If you're in that trade, I'll be doing something early tomorrow morning. Our Palantir trade looks great. Our JP Morgan trade, we're kind of watching and waiting. I'm hopeful that before they report their earnings next week, that we actually get the movement we want on that. And then our Nike trade is down a little bit, but not too terribly worried about Nike, because we got plenty of time in this trade. Our long positions don't expire until November. Nike was down a little bit today, below the strike price of our short put, which expires at the end of next week. If Nike doesn't bounce and rebound and go up a little bit from where it's at right now, then probably we'll adjust that short put tomorrow and get it in a different spot on Nike. Again, I don't want to. I don't think we're in jeopardy tomorrow or Friday of having stock put to us, but I think Nike probably bounces off of 68 and starts to come back up, but I don't know. It could continue down. I was surprised when it went up its first couple of days after earnings. I'm less surprised that this is the fourth day in a row now that it's been down a little bit. I would lean more toward continuing down, and it's super easy to adjust the trade to profit from that direction. So probably an adjustment coming to Nike in the morning, unless they're really getting a bounce. You can see they just briefly went into pause. I don't know if you're watching over here, if we get real time right there. If you were watching, that just briefly sort of touched into positive territory and then went back down again. I show Nike down, flat, down a half a penny, flat. I'm watching on my live streaming stuff, and they're almost dead flat today. So they could finish a little bit up, a little bit down. I don't think it'll really matter when all is said and done. I think that's it. I think that's all I've got for right now. I sent out a couple of collar trade adjustments. One thing to note on the collar trade adjustment that I sent on Bank of America, initially on the PDF that gets embedded into the website, I accidentally had this short call listed as a 50 strike. The image that I took, the screenshot that I took, was correct because it showed a roll out to the 320.55 strike. But in the text that I type in down below it, it said 50. I've corrected that now. So you do want to roll out to the 320.55 strike short call, not the 50 strike short call. And then we adjusted SoFi, and we're in great shape now on all of our collar trades to ride through earnings. And I might, before we get to earnings on a couple of these, add some new collar trades. That would be kind of my preference to do that. We'll see how it goes. All right. I'm going to wrap up right there. Have a good rest of your Tuesday. Have a great Wednesday. Have a good rest of your Wednesday. Today's Wednesday. I'll be back on tomorrow. Again, 30 minutes, give or take, before or after the close of the market. Thanks, everyone. Bye-bye.